This is Signe from Investing Mastermind podcast. Today's episode is the second out of 2 episodes about a Wall Street Journal interview with Charlie Munger. And this episode was recorded prior to Charlie Munger passing away on November 28, 2023. So keep that in mind when listening to the show. Now, Michelle will start it off with this episode.
Signe and I are back with a part 2 of Charlie Munger's interview answers in a recent Wall Street Journal article where a journalist talked with him for 2 whole hours and shared some of the highlights of that. So perhaps, I would love to get a full recording of whatever they discussed, but I'm not sure if the Wall Street Journal will release that. But in the meantime, we'll share some of our reflections on what they did share in this article. So I know we left off talking about how Charlie Munger has led a mostly frugal life despite being a billionaire, which is not like most people. Like most billionaires don't live as frugally as Charlie Munger, who brags about getting $7 flannel shirts at Costco. So it's kind of funny, but I guess part of their enduring appeal, both Warren Buffett and Charlie Munger, is the fact that they can relate to everyday people. And I think the world would probably be a lot better of a place if more super rich people behaved like Charlie and Warren.
Yeah, because what we also talked about in the last show is that, what we see oftentimes from people on social media, but also from fund managers, is that, living large is the thing to do. And I think, it creates a lot of frustration for people. And maybe that's something, we should talk about in another show about, how that potential dream, the American dream, might actually look a little bit different on social media than what it actually is. And it's the same thing here where they discuss fund managers. It's definitely a perception. And I think it's been a perception for many years. Like there's a book, Fred Schwett, Where Are All the Customers' Yachts? Which is all about these fund managers have big yachts, but where are all the customers' expensive yachts, right? So as a customer in some of these management firms, of course, you want to have your money grow, but oftentimes customers' yachts are not as big as the fund managers. So the next question is about if government regulators should change, like Amazon and Google, because the government says that they have monopoly power. And Google is facing an antitrust case. In your opinion, should the government break up any of the big US tech companies? And what Charlie Munger says kind of short is, I don't think it's a good idea to break them up, and it would go against capitalism. What's your opinion on that, Michelle?
Well, I mean, it seems that they have to be doing something right. And the fact that our few big tech are really pulling up the indexes, like the majority of people's returns are coming from the mostly big tech stocks in the S&P 500, like the Apple and Google and Amazon and Microsoft. Some of those are the few big winners that Charlie is talking about. So in this sense, like he said, it's okay that they've got their little niches, even though they're not so little. They're kind of pretty dominant. Like, most people don't have many options of, where they might get their phones. Like your phone is either going to be an Apple or Samsung most of the time. And your search engine you use is probably Google most of the time. Like, I don't know how many people use some of the alternatives, even though I know ChatGPT is starting to be something people use as an alternative. But, most of us have either MacBooks or Windows PC computers. So, even though there could be some arguments that the government is trying to rein in some of the power of the big tech, Charlie thinks it's okay that we have a few big winners by accident and that they're probably important for America's national interests as well. Like, instead of weakening our strong big tech companies, it's in our better interest as a country, if we're continuing on this capitalistic model, to have some of these really important, strong companies. Like, they are the pride and joy of American innovation.
And we can see what happened in China, where the Chinese government was, telling tech companies, oh, no, you can't grow too large, you can't grow too big, you have to keep to your own niche, where some of these Chinese giants had to sell off some of their divisions, some of their stocks in other companies in order to actually follow suit from the Chinese government. And it actually impacted the Chinese economy quite a lot, and also the Chinese stock market. So if regulators look towards China, they can see, okay, maybe, what they did isn't the right solution. And I can also remember tech giants or analog tech giants from many years ago, like Xerox and Kodak, which I would say were monopolies at the time. Xerox with their copying machine and Kodak with the camera. They were giants as well many years ago, but we all know what happened. And of course, we don't know, maybe Amazon, Google, and Apple is going to continue for hundreds of years in the future. I'm not saying that it's going to go like, it did with Xerox and Kodak. I'm just saying that just because you're a giant and have a monopoly for some time doesn't mean that your business model is sustainable. So in order to actually, for the government to change something, I think it's definitely risky to do that, also because things change all the time. That's my opinion.
Yeah. And I mean, maybe the government doesn't need to intervene so much, because at the end of the day, people still do have plenty of commerce options. Like, you don't have to buy your groceries and all of your everyday goods at Amazon. Some people might just be doing it out of the sheer convenience and taking advantage of their Prime membership to get the, next day or 2-day shipping. And, that's just what they value more, instead of going to their local shop. And that's why Amazon keeps getting bigger, and why maybe some smaller mom and pop shops could be closing their doors. And, that could just be what society is valuing. And for better or worse, it could be contributing to some of these, what's perceived to be monopolistic power. But in Amazon's defense, they're saying people have plenty of options. We're not the only retailer selling these things. Like, people could go to Target and Walmart and their local hardware store or whatever. In some ways, like, you can see how the government might just be trying to check their power. Like, maybe it's just trying to make sure that they're not taking advantage or taking over completely, which I don't think they are. I think people still have plenty of retail and other options that Amazon hasn't completely taken over yet.
And it also, in my opinion, it created opportunities that weren't there before. People who didn't want to live in the city can now start their own little Amazon business away from, the big cities out in the country, and they can still run their business from there, maybe have storage opportunities out there. So, there are some good things that came out of it as well. Or the companies might be, using Amazon in some way to build their business. So even though, we might see areas, and of course, that's sad if you had a grocery store and now it's closing, but hopefully, you have other opportunities that you can jump on and, use some of that expertise you had from running a business into, opening a new business and actually following evolution and doing something new. I know it's kind of, mean and tough to say that, especially, if you lost your business. And as a business owner, of course, I would definitely not like that scenario. But what I'm saying is, there are opportunities out there to still grow your business and even do it in rural areas. And that wasn't really that much of an opportunity before. We kind of saw that people have to move away from rural parts of, the country, and now they can move back and start a new business and actually ship things out from there. So the next question is always interesting. And the journalist asked if there's anything you've learned recently from the books you've read. And I wish he would have mentioned a book that he had read recently, but unfortunately he doesn't. But I would definitely love to read some more of what he's reading. Instead, he answers, that he's learned a little something from every book that he has read, and that in order to be smart, you have to read books, and that he's been reading books since he was 6 years old. That's his answer. For me personally, I also read a lot of books, and it's within a wide range of different things. Right now, I'm very interested, of course, in business, since I started my own business. So I'm recently read The E-Myth by Michael E. Gerber that was recommended to me. And great book. I learned a lot about business. And if you're a business owner, I really recommend it. Even if you're a leader, I would recommend it too, because I thought when I was reading the book, oh my goodness, I could have used this as a, leader in my corporate career. So I highly recommend that book for sure. It's a great book, but I also read self-development books. I really love Michael A. Singer, The Untethered Soul, and some of his other books that, where it's very much around, letting go and not being stuck in the past, or being stuck in the future for that matter, but living here and now. And I think it's very beautiful. I really want to achieve that beautiful state that he's talking about. So that's some of the books I've read recently that I really enjoyed, and I recommend you guys to listen to. It's not investment books, but it's okay to also read something different than investing all the time. How about you, Michelle?
For sure. And one of the books that I've read lately is also not really investing related, but I'd seen a book review in the Wall Street Journal about this book called Generations by a psychologist or psychology professor named Jean Twenge. And in that Generations book, I learned a little bit more about millennials. And one of the myths, speaking of myths, that she helps to dispel is a lot of millennials think we're broke and we're not earning that much compared to prior generations. But she actually has written that in contrast to what a lot of us think, millennials are earning more than prior generations did at our age. But some of that has to be a little bit qualified, because let's say during the silent generation, or maybe earlier on in some of the baby boomer generation, maybe some people still had the luxury of having just a single earner household, because she brings up how millennial households are earning more than prior households in prior generations. So, I wish she would have teased this out a little bit of, sure, millennial households are earning more income, but could that be because there are two earners instead of only one earner compared to prior generations? So that, even though it's interesting, sure, we could be making more, but it wasn't explained that if it were due to having primarily two earners in a household compared to prior generations. So interestingly, that might be something that supposedly we as millennials could be earning more than prior generations, but take that with a bit of a grain of salt, however.
Yeah, I would love to discuss that further. I really enjoy also talking about generations and cycles. So, it could be something we would dive into in another show, actually, about the American dream. And I also really, in that regard, I want to read that book, but I also want to recommend The Fourth Turning. Neil Howe and William Strauss, I believe, are the authors of that book. And it just gives you great insights to, generations, and also the economical landscape that each generation is actually facing, because their thesis is that it's cycles over and over again. It's not a one static line, but we're living our lives throughout 100 of years. It's a cycle that just happens over and over again, basically, or 80 years, I believe it is. I think they fine-tuned it recently. If you enjoy reading, go pick up the books that we recommended here. I'm definitely going to pick up that book, Michelle, and read that. It sounds super interesting.
Yeah, it's good to learn about the different generations and how we can better get along with each other. Like ultimately, it's interesting to learn things about your own generation, but also how do we work better with each other, like for working with baby boomers and also Gen Z, and what's important to each generation generally. So another question to wrap up today's podcast with that the article covered was, you've spoken about the importance of psychology in investing. Is there a cognitive bias that you think is particularly significant in the markets today, is what the journalist asked of Charlie. And he reflected that there are lots of cognitive biases that are very significant. And he's saying, a lot of people tend to overrate their own intelligence and skills in deciding what to do and what not to do. And that's definitely something to kind of let yourself think about, of how you make decisions and how would you qualify your own abilities in terms of, how good your decisions are. So ultimately, this is a big judgment call in people's human psychology.
What I thought about was back when I was a leader in the corporate world, at some point I actually created a spreadsheet, a tool that would help me to not be biased with, when I had interviews with candidates, because research shows that within the first 5 seconds of meeting someone, you already have an opinion about them. So it's like immediately. And it helped me tremendously, because what that spreadsheet helped me with was to identify how well candidates was actually answering the questions and was answering sort of correct. Now, you might not have a correct answer, but do they know what they're talking about? And it actually helped me go beyond what I could see on the screen. Like oftentimes these interviews were online, so the opinion was made of, how is their voice, what do they look like online, etc. And instead actually looking at how well they answered the question. So I'd done some reflection work before the interviews to say, okay, this qualifies a good answer on this, not like these are the exact sentences they have to say, but someone who knows a lot about this area would cover some of this. And it really helped me a lot as a leader in looking at candidates differently and actually listening to what they were saying, and not just looking at how they went about the interview. Charlie Munger is also known for talking about the Lollapalooza effect. And what that means is that, you can have one bias, and then you might actually be aware of, okay, I'm biased right now, but if there's a lot of biases in play, in effect at the time, you're likely to not know that you're biased. And that's the Lollapalooza effect that he's talking about. It's one of those Charlie Munger words.
Yeah, the Lollapalooza effect is definitely interesting, and it's covered in the Psychology of Human Misjudgment speech that he gave. And that actually is something that I'd want to talk about with you more. So maybe we can read that transcript, or you might even be able to watch it online, of being able to see Charlie delve into a lot of these human cognitive biases. And he attributes a lot of his success to avoiding committing these acts of misjudgment. So if you can avoid making similar mistakes to others, you're bound to be more successful. So what do you think about that, of discussing that Lollapalooza effect that you just said, as well as some of these other principles that Charlie has talked about in that transcript?
Yeah, I think it's a great idea to do that, because, there's so much interesting content in that Lollapalooza effect. Lollapalooza effect. Also, there are so many biases out there. And for example, Charlie Munger has recommended Dr. Robert Cialdini, who wrote the book Influence. And in that book, Cialdini writes that we're only correct 80% of the time when we say that we're 99% sure. So, it's one of those biases where there's an optimism bias or something like that, where you've probably heard someone say, I'm almost 100% sure. But, it turns out that they're, about 80% right when they say that. And, another bias could be social proof, where we tend to believe what people around us believe. And then, if you hear something that somebody else say, you're going to start saying it. And then all of a sudden it's true. Like one of the things that I hear a lot is that low risk equals low reward in the stock market, and high risk equals high reward. It's some of those things that, a banker might say, or, if you want a retirement fund, you can choose between low risk, investments or high risk investments. But for example, in the low risk investment pool for years, they had bonds, which at that time, it's definitely not high risk, but it's just, why would you even invest in that when you have so low interest rates? That's not even that's terrible.
But the irony with that, Sina, is that even though people generally think of bonds as being low risk, they actually could turn into high risk, because a lot of people, like especially elderly people who think like, oh, I'm going to put my money in a safe place, like a bond mutual fund, they paid higher prices to go into that fund. And now a lot of those funds have been going down in price, because with newer bonds coming out that give higher yields, it makes the value of older bonds that were maybe only giving 1 or 2% worth less. So the irony is, we're talking specifically about being in a bond fund. So a bond fund has actually become higher risk, even though you thought the bonds in and of themselves should have been lower risk. But that's completely turning a lot of that Wall Street or conventional investing mumbo jumbo on its head.
Yeah, exactly. And I'm sure a lot of listeners out there have heard about this. Oh, when they talked about what to invest in for retirement, oftentimes that's what they say. And it's just something I reflected on recently, because I had a client who said, well, the bank said that this was very, very low risk, and then it would also be low reward. And I thought, well, low risk does not equal anything about reward. It could be terrible reward or good reward. It's like, we invest way low risk, but our rewards are high. We choose quality companies and we do a lot of work, which makes it low risk what we're doing. But then what we see over time is, a quality business will yield a great return. So, it's just one of those things where, we created a social proof that everybody is saying that, so everybody believes it, right? So that's definitely a bias, talking about bias.
Mm-hmm.
All right. Do you have anything to say before we end the show? Anything, to wrap up this discussion about Charlie Munger? Any last words?
Yeah, I think maybe, continuing on with the Charlie Munger theme of life lessons we've learned in honor of his upcoming 100th birthday is something that maybe we can keep doing. And I think it would be great to delve into the psychology of human misjudgment some more. So hopefully our listeners will also have a chance to read some of that in the meantime, and we'll cover that in a future episodes.
Great idea. Awesome.
So till next time, everyone.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts, so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.